everybody, it's Eric with Low VA Rates. As always on Friday, I sport my red shirt because I want you to know that I support the military. If you'd like one of your own Red Friday swag shirts from Low VA Rates, let us know in the comments below and we'll work on getting you your own. Today we're going to talk about how to calculate your remaining entitlement in 2020. Okay, so calculate, right, remaining entitlement. Things change around here, and in 2020 there are some differences in how you might calculate your remaining entitlement. Let's get started. As we begin, let's jump right into probably your first question. Why does 2020 even matter? Well, before 2020, the calculation for entitlement was tied to the VA loan limits for every single county in the country. However, on January 1st of 2020, those loan limits disappeared and effectively changed how entitlement calculation would be done. Now that you understand why we're showing you what the calculation looks like in 2020, we should probably pause for a second and explain what entitlement is exactly. So to start, your entitlement is divided into two tiers. Your primary, or what we call basic entitlement, of $36,000, and your secondary, or second tier entitlement. Before 2020, the calculation of your total entitlement was determined by the county loan limit for the area you lived in, or that you'd be buying in. In fact, only the amount of your secondary entitlement was directly affected by these limits. Remember, your basic entitlement is always $36,000. Now, before 2020, this is how you would have calculated your secondary and total entitlements. If, for example, you lived in a county where the loan limit was $484,350, you'd calculate your total entitlement by multiplying that $484,350 by 25%, or 0.25 is how you would multiply it numerically. And that would give you a total entitlement of $121,087.50. Then, to get your second tier entitlement, you simply subtract $36,000 from that $121,087.50. This means your second tier entitlement would have been $85,087.50. However, post 2020, if you haven't used any of your entitlement, or it's all been restored, there is no limit. Let me say that again. There is no limit to the amount of your second tier entitlement. Basically, this means you can get a loan at any amount the lender is willing to lend you, and the VA will still guarantee the full 25% of it. So you qualify for $1 million loan, the VA guarantees $250,000. Again though, this is only if you have all of your entitlement. None of it can be tied up in any other VA loans. So, what if you don't have your full entitlement? This is where things can get tricky with the calculation. The VA calls this situation having partial entitlement. If you only have partial entitlement, the county loan limits once again play a role in how your total remaining entitlement is calculated. Basically, the VA explains it by saying, and I'm quoting them here, right out of the handbook, for veterans with partial entitlement, the maximum amount of guarantee for a loan above $144,000 may not exceed the lesser of 25% of the loan amount or 25% of the county loan limit, minus the amount of entitlement previously used and not restored. Oof, that's a mouthful. So let's try to break this down in simpler terms. First off, you might be wondering, why $144,000? Where does that amount even come from? We know it seems very random. But if we go back to your basic entitlement, you'll remember that it's $36,000. And what is $36 $25% of $144,000. Now let's translate the next part of their statement. Basically, it's stating that there are two possible calculations to determine your remaining entitlement. And the one you will go with will be the one that results in a lower entitlement amount. Okay? Now, the very last part of the statement we need to crack is what exactly those two calculations are. The first calculation says it's simply 25% of the loan amount. Luckily, that's pretty straightforward. And the formula would look like this. Take your loan amount, multiply it by 0.25, and that equals your maximum guarantee A. The second calculation is a bit trickier. It says 25% of the county loan limit minus the amount of entitlement previously used and not restored. This one will make more sense in the example because it involves two numbers we do not have yet, the county loan limit and the previous entitlement amount. But if we were to turn this calculation into a formula where we plug those numbers in, it would look like this. Take your county loan limit multiplied by 0.25 and then subtract your entitlement used. That equals your maximum guarantee B. Finally, the last step in the calculation isn't referenced in this section of instruction, but it is still very important. Basically, once we know the final maximum guarantee between the two formulas we just used, we'll then need to calculate if the percentage of the VA maximum available guarantee is enough to cover 25% of the new loan amount. If it's not, there's a chance the borrower would have to bring in a down payment that makes up the difference in order for the lender to be willing to give them the loan. So then the formula to determine the percentage of guarantee looks like this. Take your final maximum guarantee, divide that by your loan amount, and that equals the VA's guarantee percentage. I know that's a lot of information that we just threw at you, but let's go ahead and try to do some actual calculations to see if this starts to click. Here we'll go over three examples. One where the veteran's entitlement is enough to cover the VA's 25% guarantee. One where it only covers part of the guarantee, and one where the veteran's entitlement is negative. For our first example, let's say we have a veteran who has used $36,000 of their entitlement on a previous home. Now they want to buy another home for a loan amount of $200,000. The conforming loan limit in their county is $500,000. So now that we've got all the numbers we'll need, let's plug them into our two formulas. Formula 1, it looks like this. $200,000 loan amount times 0.25 equals guarantee amount A. If we calculate it out, that means guarantee amount A is $50,000. Now formula 2 looks like this. $500,000 times 0.25% minus the $36,000 equals guarantee amount B. If we calculate it out following math's order of operations, we need to first multiply. So that means $500,000 times 0.25 is $125,000. So now the formula is $125,000 minus $36,000, and that equals guarantee amount B. And when we finish the calculation, we end up with a guarantee amount B of $89,000. Now, if you remember, the next step is to compare the two amounts because the actual guarantee amount is whichever one is less. So, in this case, that's guarantee amount A at $50,000. Finally, it's time for the last step, calculating if the VA's guarantee amount is 25% or more of the loan amount. Plugging our numbers into the formula, it looks like this. $50,000 divided by $200,000 loan amount equals the VA's guarantee percentage. Once we do the actual calculation, we get a VA guarantee percentage of exactly 25%. So, for this hypothetical borrower, they shouldn't have to bring in any down payment. They have enough entitlement to cover it. Now let's try our second example. Let's say our veteran wants to buy a $765,000 home. However, they've already used $70,000 of their entitlement on a previous home, and the conforming loan limit in their new area is $724,000. If we plug the right numbers into Formula 1, it now looks like this. $765,000 times 0.25 equals guarantee amount A. And if we calculate it out, that means guarantee amount A equals $191,250. When we plug our numbers into Formula 2, it now looks like this. $724,000 times 0.25 minus the $70,000 equals guarantee amount B. If we calculate it out following math's order of operations, we multiply first, so that means we get $181,000. Then we subtract $70,000, and that equals guarantee amount B. If we finish the calculation, we end up with guarantee amount B equaling $111,000. Next, when we compare these two amounts, we see that guarantee amount B is the lesser amount at $111,000. When we plug that into the last step, we see $111,000 divided by $765,000 equals the VA's guarantee percentage. And when we do the final calculation, the VA's guarantee percentage is only 14.5%, which is quite a bit away from the 25% guarantee that most VA lenders expect. If the veteran still wants to proceed with this loan, the lender will likely require them to bring in some kind of down payment to make up that difference. Now it's time for our third and final example. For this one, let's say the loan amount is $400,000. The veteran's entitlement used previously is $161,000, and their new county loan limit is $600,000. For formula number 1, when we plug in the numbers, it's going to look like this. $400,000 times 0.25% equals guarantee amount A. If we calculate that out, that means guarantee amount A equals $100,000. When we plug the correct numbers into Formula 2, it looks like $600,000 times 0.25 minus $161,000 equals guarantee amount B. When we calculate it using math's order of operations, we need to multiply first, so that means we get $150,000 minus $161,000 equals guarantee amount B. And if we finish up the calculation, we end up with a guarantee amount B of negative $11,000. Now, when we compare the two loan amounts, guarantee amount B is the lowest at a negative $11,000. However, because this number is negative, that means in this example, the veteran does not have enough entitlement available to purchase their home. In fact, we don't even need to calculate the next step. Thank goodness. If the maximum VA guarantee amount is below zero, then that means the VA will guarantee zero. Now, to sum up the entire calculation process we just went through, it basically took us a minimum of 4 steps. Step number 1, calculate Formula 1. Step number 2, calculate Formula 2. Step number 3, compare the results of Formula 1 and Formula 2 to choose the lesser number. Step 4, use the results of step number 3 to calculate the final guarantee percentage to determine if a down payment is needed. Now let's talk down payments. In 2 of our examples, it was determined that our hypothetical borrower would probably need to bring something down. But how much would that be? Well, that's a hard question to answer because the VA hasn't given any set guidelines on how lenders should calculate it, which means it's up to each individual lender to decide how they want to do it. Some may just ask the borrower to bring in enough money to get the amount back to 20 or likely 25%. So if we go to the second example where the lender has only 14.5% of a guarantee for the requested $765,000 loan amount, this type of down payment request would mean they could ask the borrower for a down payment of $80,250. in order to get that 25% coverage. But other lenders may choose to revert back to how the down payment for VA jumbo loans is calculated, which was 25% of the difference between the loan amount and the county's conforming loan limit. Yes, it sounds confusing, but it's not as bad as it seems. This is what the formula would look like. Your down payment equals your loan amount minus the county loan limit multiplied by 0.25. In this formula, it's important to note that the parentheses in math's order of operations, anything in parentheses gets calculated first, even before the multiplication. So now when we plug in the numbers from the example number 2, the formula starts to look like this. Your down payment equals $765,000 minus $724,000 times 0.25. And if you use the correct order of operations, remember parentheses first, we subtract $724,000 from the $765,000 to get $41,000. When we update the formula, it shows that the down payment equals $41,000 times 0.25, with the final calculation giving us a down payment of $10,250. So there you have it. 2 of the most likely options for how a lender might calculate a down payment. Wow, what a journey we all just went on together. Hopefully you were able to follow along and understand how your entitlement, VA guarantee, and potentially down payment get calculated for VA loans in 2020 and possibly going forward. Of course, it was a lot of information. And if you're still a little confused, that's okay. The good news is you can always call us and we can do all the math for you.